just started my recording now. As we recorded, I'll post it out. So I'll watch, obviously, as we tag London high here. But yeah, I had the market review yesterday, looking for bullish prices. We were at least anticipating that going into the day. Yeah, perfect hindsight. So as we get into the higher time frame, I'm going to showcase kind of what I was looking for. And obviously what we got as a result, and then I'll look at the trade and obviously the rest of the tape read for the session. Okay. So I chose not to stream today, to be completely honest, for myself. As we have these longer weekends, and especially coming off a bank holiday, price action can be a little funky. And I just needed some time to like lock in and just zoom in and focus on myself. It's sometimes very difficult for me to point out things and trade myself at the same time. So the reason that I did not stream the first 30 minutes is I was just completely focused on the price action. All right. Now that I'm filled out for the most part, well, I can allocate some of my brain resources over to reading this, right? Anyways, so as we look at the 4-hour chart, I want to go a full top-down breakdown. Obviously, just pull up maybe your 1-minute chart and look as we continue to climb here. But on the 4-hour chart, we've got the previous week low here, previous week high marked out here. Right, we're constantly weighing both sides. We have a scale. When that scale is even, it's low probability. When that scale is tipping towards one end, it's normally higher probability in that direction. So coming into the 4-hour, we see this larger gap being placed almost near that sisti. If we look at this opening price here, either way, gaps up, drops back into the gap, respects consequent encroachment, and starts to displace up again. To me, it's very hard to argue bearish price action, at least coming into the 4 hours, visually looking at it, right? You got maybe a shift here, you got a gap here, trade into the gap, respecting it. Order flow on the 4-hour to me looks bullish, right? We also have a sell stop sweep right over here. It's very hard for me in the morning to argue sell stops to be ran out. Now, as we get kind of, as 9:30 was printing, I was kind of on the fence. Let's go into the 1-hour here. Same thing here. We've got this dealing range between high to low. And the reason I've marked out this low as a soup is because as we approach the first stage of the distribution within the market maker model, a lot of times you have this internal range stop sweep, and sometimes you have this deep retracement like this. So while this is going to be kind of confusing for some, or maybe scary as we're dropping down that much, and this is going to be a full black candle, notice we still have an imbalance in discount here that was completely unfilled, as well as this inversion if you wanted to use that, but I'm looking more at this bisi. And we have to remember that 9:30 isn't always going to form the low right at 9:30, right? It's really between 9:30 and 10 o'clock. All right, so as we're dropping into that 1-hour gap here, I'm constantly arguing, are we going to be bearish? Are we going to be bullish? I was sticking with the bullish bias the entire time. It's very hard for me to even argue any shorts into the IRL. I just think the weekly direction is towards these relative equal highs and eventually the weekly gap up there. So as we're dropping into that, I'm also on the 15-minute chart marking a PD raise. I did not like the fact that we took out London low. I don't think this is a seek and destroy profile, although we're taking out both sides. This is just one of those really deep retracements coming to New York. And normally why I do not look at Asian. When we look at kind of the price action here, if we look at this in terms of just these two sessions, this would be a New York open reversal session. Or profile rather, right? We're taking out London low. You prefer if there's SMT at these lows, and there is between YM. If I show you between here, and if I go to the 1-hour chart, you'll see it between there, and there. So SMT at the daily low. Let's go back in here, and obviously on the 5-minute chart or on the 15-minute chart, we're tagged that and start to print back up. And now in this case, I'm going to show you where I was looking to get in, and obviously the one that I'm currently in, I'll show you that. Let's make this blue. So we have the 9:30 opening price here. Okay, I delineated the 9:30 opening price. That 9:30 opening price, by the way, if you're just now joining, the rest of the previous 5 minutes was recorded, so you can go back and watch it if you want to. And I'll have a full market review later today, probably publicly. But this 9:30 open, right, when we're looking at how a New York session or even how any session range prints, we got the open, low, high, close. If I'm bullish, I want to be buying at or below the 9:30 opening price, right? Preferably. So when I see this 9:30 opening price lining up, as well as in here, we got the order flow starting to support using this inversion gap here, displacing up. Notice as well the lack of inefficiencies forming in here. We got the 9:30 opening price outlined in blue, as well as the gap that prints into it. As we drop into that right at 9:50, below the 9:30 open, into the inefficiency, also into this gap here, if you can see this tiny gap there. Are there any gaps below us that we expect it to be filling? No. Are there any sell stops we expected to be taking after we just took out London low? No. So as we're dropping into below the 9:30, as we start to trade away, I can look to get in there, place my stop at that swing low, and then look for the London high, as well as we have a 15-minute premium inefficiency up here. So as we're going from London low to a premium gap, I'm going to still use that as a target, as well as London high. And then I mentioned in the predictions chat, any session drawn time, preferably when we're not expanding, is going to be between 10:30 and 11, right? 9:30 to 10 forming the low, 10:30 to 11 forming the high. So although we're tagging this premium gap, although we're tagging the London high, if time is not correct, we still look for preferably bullish prices. So let me pull up the execution I was talking about. So if we go to 15-second chart, you'll see it. But basically, as we're dropping into that, like I said, it's starting to displace away. I'm getting in on the SysD or slightly after the SysD there. Stop at the low. Entry again as we retag into that 1 minute inefficiency, wicking it into there and starting to leave, boom, getting in there, and then selling one on the premium inefficiency, selling one there on the London, selling two on the London high there. Start to trim my stop a little bit more. And I'm just looking for now time of day. I've just kind of jammed this up pretty far. I don't really care where it is in price at this point. I'm just targeting time. I could be looking for the buy side all the way up on the 1 hour chart up here. I don't think that we're going to get that much juice. So maybe we could. But I'm just relying on time. Now, if the 5-minute order flow is still looking great like it is now, I very well may hold up into that buy side. No problem with that. If at 10:30 and 11 o'clock we start to roll over and start to retrace, I don't want to be any retracement lower for a move up higher. I just want to get out and be done for the day, to be completely honest. I don't like holding for hours and hours and hours because I'm constantly checking to see how price action is moving throughout the day, maybe every hour. I don't like, to be completely honest. I just want to be done and leave it. And I'm very happy with that execution because of the fact that I waited last week, got in here, stuck with the bias, executed on a very nice RR trade, and everything else. I think in terms of my own discipline and what I'm looking for, exactly what I was there for. We got a gap here forming with the bullish order block. Notice this as well. Don't miss this. Inefficiency here. Can you explain why we didn't stop at the breaker? This deep retracement was the only thing that I didn't predict. Yeah, that was that same thing. Same thing. I was looking for why. Sometimes I don't really have an explanation as in terms of right now for why we had to drop this far down and take the London low. I think it's probably because we had no SMT down here. So in order for there to be SMT at the lows, and obviously 9:30 being the first volatility injection of the day, it's just the profile. The profile is why we're dropping down. And you don't even look at this break over here. You just look at the fact that between London and New York, what's forming the low? New York session is, right? And between here and here, we have SMT with YM. All right. And yeah, that's definitely going to be scary to come into. But when I'm sticking with my bias, I'm constantly saying, does this look like a bearish drop? Does this look like something I want to be partaking in? As it's dropping here, sure, it's starting to give me some inefficiencies as it's dropping down, but I just can't see this being the high of the session and dropping all the way into the range. And if that's what happens, then so be it. I just don't get a trade. I'd much rather trade with my bias and towards that direction. The lack of, let's see, JKX's trade. Beautiful. I love it. Literally the same thing. Yep. Lack of inefficiencies after 9:30 got me. I'm waiting for the macro 9:50 mitigation entry form right now. There you go. Yep. So we still got about 8 minutes left on the clock in terms of a low-hanging fruit DOT. Guys in the PDF, you know the rest of yours, what's kind of listed there. But 10:30 is the one that I preach publicly, and you all know that. So anytime between this 10:30 to 11 o'clock, you don't even have to look at anything on the left. I normally just look for what's the new session high forming. Once the new session is high forming, that will be a very fine exit, but obviously we prefer to pair it up with some sort of time-based liquidity or time-based gap with time of day. So price draw in, like it looks like this, right? Crosshair, time and price lining up. Full pull at the low hanging fruit as long as it's at least 1 to 2R. Today was 2.5. There you go. Yeah, that's all you need. Yeah, this one trade here made up for all my losses last week. I was slightly the loss on. Did I take a trade on Friday? I can't even remember. I did. Yeah. Okay. So the loss on Friday pushed me over on the red. For the week, one of the first red weeks I've had in the past maybe 4 or 5 weeks. This one trade here, on my other screen was about a 7.3 to 1. So that made up for all the losses and more from last week. So patience pays. All right. You don't get a trade every day. You don't get a trade every week. Sometimes you don't win every trade. You can lose 3 trades in a row and then one trade, boom, bang it out, and you got one win, right? 3 weeks of red and this guy's still green. There you go. Look at that. Look at those P&Ls. Look at the P&Ls on the right. Thank you for sharing that. Negative 514, negative 462, negative 489, 1500, 1200. So when we overstress about losing trades, when we overstress about is our model going to perform in the long term, if you are protecting your capital with proper risk, you can lose 2, 3, 4, 5, 6, 7 trades, right? If someone has that, let me see if I can send this this picture out. I normally send this out a couple times a month, but it's always a good reminder because sometimes we forget the math of trading. If you understand the math of trading, it's very, very important. And if you avoid it, you're fearing something, right? In the beginning for me, I did not like to have any sort of win rate or any sort of. I was scared. I was scared that my model was not going to perform in the long term. So every single time I took a loss, to me, it was either an attack against me or it was telling me that this is not a useful model. Sometimes we cope. Sometimes we make a new model. Sometimes we adjust. Sometimes we overtrade to cope. But if you look at that picture there, you pull it up and you look at the bottom right, okay? Consecutive losses. If you have around a 40% win rate, let's say that, okay? If you have a 2R, if you look at, let's first look at the top left there. If you have 2R, you need a 33% win rate to be profitable. 33%. Now let's look at the 40% win rate on the consecutive losses at the bottom. The chance of you taking 5 losses in a row at 40% is around 8%. So that means if you take a loss, the chance of that happening in a large numbers is about 6% or 8%. Obviously, as you increase win rate, you're going to have less and less chance. But if you have the risk management to allow for, 10, 20, 30 losses, especially on something that's a very low kind of amount of drawdown, like a prop firm, something like that, you cut that into 10, cut that into 20, and obviously you're dropping risk as you lose. You can destroy the prop firms. You can destroy those kind of evals. All right. You can easily pass them in 2 trades. Not by over leveraging, not by over trading. I'm simply like by using micros. You can by using micros and by using go to RR and good trades, you can easily bang those out. So I know you touched on it, but if this was a New York Open reversal, wouldn't New York be the low of the day in regards to midnight open, or was this a New York continuation with the deep retracement, meaning So that's a good question. Great question. This is one of those weird profiles, I think, 100%. When we look at respect to midnight open, right? It's a great question. Technically, it is the low because on YM, we do take it out. So it's important to know that. So technically on YM, it's forming the exact profile we're looking for in the PDF and on the advanced time guide videos. I talk about that. So it's a great question. We do drop below the midnight open on New York in YM and form the SMT between there and there, which is also why it's kind of weird, because when we look at it on a higher time frame perspective, it just looks like it's taking out London low and then going back to London high, which normally when we're bullish, we don't see that kind of profile. Normally you'll see London actually kind of consolidate and then drop down. And the thing about the market is it's always offering you different opportunities. It's always offering you different distinctions. There's no two things that are the same. So when we learn the different distinctions of the market, we're able to identify with higher probability what's going on, as well as these weird variances of, yeah, this is a very weird New York Open reversal profile, but still meets the requirements on another chart. And that SMT we're using is actually beneficial, because then we know that this is the stronger asset. And as we get into the lower time frame executions, we trust that this low is not going to be ran out, nor is there going to be any more deep retracements after that low has been placed in. So great question. Yeah, typically on NASDAQ especially, you want to see that drop down below midnight open, take out the sell side at London. That's fine. Then go for the buy side at London. That's the standard profile, right? In this case, you normally see this kind of exact one on ES or YM, and the NASDAQ is doing it. So we just are seeing kind of the other side of the mirror, if you will. And it looks a little funky as we get into it. But nothing's broken. Nothing's incorrect. So still got 2 minutes left on the clock. Like I said, if you got multiple options here. You've got either just targeting at the time of day, targeting at price as well. On the 1 hour chart here, we don't really have. Let's go to the 1 hour. And why am I using the 1 hour? Because that's what if this is the daily low, we need a daily target. In terms of targets, we've got this inefficiency here, this inversion gap, which counts as an IRL, as well as this, obviously, this large sibi. And obviously the buy side up there. So if you wanted to look at this as a discount retracement to buy side, then we've got that as an ERL, as well as this is an ERL. So could be holding it for that long. Do I really want to be, in terms of like just the mental capital used? Preferably no. And I'll probably just close this one out here as it. Let's actually mark that one out. I want to see what that is. Oh, well, there's 10:30. I had an alarm on my phone. Yeah, so you got -2, -2.5 up there as well, if you wanted to use that. Even if you wanted to extend it even up to there, it's lining up with the previous day high. Sorry, previous week high. So a bunch of stuff that's lining up there. Obviously, I could drag this down to there if I wanted to. But it is 10:30. All right, so all we're looking for is for these relative equal highs to be ran out post 10:30, and that would be your session low to session high. Let me actually pull up my other chart here. Yeah. And then also we had 10 a.m. news today, orange folder, but look how nicely, if 9:30 reversed or manipulated, 10 a.m. should expand. It doesn't matter if there's news, it still plays into the program. So the program is to, sweep liquidity, go to inefficiency, or the other way around, or be manipulation to expansion, expansion to manipulation. That's all going to play in. All right, we have nothing to fear there. Where is let's go to the 1 hour here. All right, there we go. Close this out. Yeah, absolutely beautiful expansion leg. Exited early because I thought it might be a swing to Z day since London low was taken. Right, yeah, it's just one of those weird ones where I knew that was going to be an issue for some as we took out that London low and I was getting in this. It is just one of those weird profiles that we see. Not even profile, but just weird distinctions of the profile, if that makes sense. Where it's still following the rules as it always will, but it's just odd. And that's why we just wait. I'm not trying to soup this day. I'm not trying to, especially since we have no high impact news. I'm waiting for the macro. get in the macro, bread and butter, easy setups, right? And we've got tons of news this week, so we can actually smash out of the park. There's your new high post 1030. Let's annotate this and annotate the time of day as well. 2 minutes off, but 10:32. And there is your high of the session, at least for now. I'm not expecting that to be the high of the session or high of the day or anything, but we go back to the predictions chat. I'm going to reply to this and we'll send a screenshot there. So your draw on time for sessions mostly work as long as we're not in the swing to Z profile, but that 9:30 to 10, 10:30 to 11, that's your short-term draw on time every single session. Great tool. Beautiful explanation link. I agree 100%. We didn't even get that retrace into this gap. It was even better. Stop at the 9:30 low because you think it should be an intermediate. Yeah, if you're looking for like a long range swing, that 9:30 low stop should be great. SMT protected intermediate term low. Boom. Give me that. What's the significance of 10:30 compared to 10 a.m.? So in terms of the session, we've got sessions and kill zones are kind of overlapping, right? There's wider kill zones, then there's sessions in between. Sessions are static periods of time. When we look at something like 9:30 to 11 o'clock, it's a static period of time, meaning it's the same thing that we look at on the x-axis every single day. It does not mean that we're going to get the perfect open, low, high close every single time throughout that window, right? As we know, sometimes the manipulation is going on before 9:30 and then 9:30 will expand. So when we're looking at a kill zone like 10 a.m. to 12, which is what we look at as the London close, 10 to 12, right? We look for an entry in terms of the profile between 7 to 10, exit between 10 to 12. Now, normally what we don't see is it finishing right at 10 a.m. unless it's like a swing to Z profile or something like that. So 10:30 is just deeper into that London close, as well as deeper into the entire static session we're looking at. There is some other significance around it, but not in terms of a higher time frame perspective. Is 10:30 normally super important? 11 o'clock actually is a little bit more important, but 11 o'clock onwards is normally what we call take profit hour for these large expansion days. But 10:30 to 11 is time of day that's relative to the session. So when we look at, if you go back and watch, I think core content month 7 or month 10, when he's talking about index AM session setups, he'll say, okay, it's a 60-minute or a 50-minute PD array that you're targeting, and you rely on time of day. And time of day that he said before, as well as what I've seen in terms of just my own backtesting and looking at this static window of time, I see that thing play out 10:30 to 11. So 10:30 is like the minimum. When we look for the expansion days, it's not normally the high or low of the session or high or low of the day exactly at 10:30. Normally we'll continue into 11, continue into lunch. But for low-hanging fruit, for people who are new to a concept like draw on time, which in the beginning is very difficult to do, at least for me, when I started using it consistently, holding till time of day is something that's crazy in the beginning, because you're like, in the beginning, it makes sense, obviously, but in practice, when you see it run a London high, when you see it go 200, 300, 400 points, whatever, and it's not 10:30 yet, are you really still going to be holding? Are you really going to be, being able to think clearly and not worried about the money side of it? So 10:30 is just in the beginning what I used to target when I first started it in 2024 using draw on time. That was just the low-hanging fruit in terms of the x-axis. So, and then you can obviously push it further and further and further, as you know, in the PDF. So there's no like huge significance of it, but all those things there together is why I use it and why I try and teach it. Just for the beginning, what to look for. And then after that, you're free to use whatever you want. Make sense? You're correct on some profiles. 10 a.m. is that low-hanging fruit. When we look at the session between 7 to 10, 10 to 12. So 10 is like right in the middle. There's an overlap there. So yeah, technically 10 a.m. could be the absolute minimum, but when that price is not hit, normally it's not. You look for further into the session. So it really could be any time between 10 to 12 as we're tagging that. But that's where it gets a little weird because there's so much discrepancies in what you could be looking for in time. It comes down to practice and what you've seen over and over and over again. But on something like a swing to Z profile, 10 a.m. is kind of the cutoff time, if that makes sense. If you can kind of visualize it, it drops into 7 to 10, and then 10 to 12 is where it consolidates. So at the absolute minimum, absolute maximum for that early move, it would be at 10 a.m. I'm going to try and incorporate it into the time video. It's such a complicated concept sometimes that, it's not like clear, oh, target London high. There's overlaps, there's different sessions, there's macros, there's silver bullet, there's a bunch of stuff that all overlaps and all kind of plays into each other. And it requires a day-to-day analysis to use, right? If time was static, meaning if every single day at 10 a.m. it formed the low, everyone would pick up on that, right? If every single day it took out the high at 11 o'clock and then it dropped back into the range, everyone would pick up on that. It would no longer be ICT, it would just be retail. So there has to be discrepancies in time, day to day, where it's forming different times of the day, forming the low. Sometimes it's a range. Sometimes it's exactly right at 8:30 or right at 9:30. So there's different rules that apply to each individual day, and sometimes it's only when you're watching it does it start to make more sense. So when it's very difficult, we rely on broader time concepts, and then as it gets more and more refined, we can refine down kind of this windows of time to almost the minute, or the macro where these things will play in. And you kind of default to certain things. You have extremes of the range as well, like 15. Never mind. You know what I'm talking about. Yeah, they have to confuse retail. So dropping back into the range here, we've got the bullish order block, nicely respected with the candle body. Is it dropping below mean threshold of the? It's not. So it doesn't touch it, nor does it close below. You're looking more for a close below, but either way, just holding consequent encroachment, holding the main threshold of the order block. My understanding is correct. We made the soup and should displace. Let's check. Got one on that YM. Where's this low? We don't have. Do we have SMT there? I don't think we have SMT. But you're probably right. What's the low on this? 42, 134. That's relatively close. You're probably right. I mean, just price-wise, it looks decent. Order block, no gap. That's the only thing. I mean, respecting the CE pretty nicely and coming back down, immediate rebalance there. Should pop up. I want it to preferably displace and close above that swing high. No breakaway gap being left open. Gatekeeper of doom. Nah. Anyways, yeah. So I'll do a full kind of market review later today. That'll be recorded as well. This little mini section of tape reading was also recorded. So if you want to go back in and watch the first 5 minutes or so, I give a brief explanation as to what my bias was. I know I didn't post one. It's daily bias or anything really much in predictions chat, but the reason I simply didn't stream today was I just needed to focus. So it's sometimes very difficult for me to stream and trade at the same time. So that's really the only reason. Good price action we got as a result. This week should be fantastic in terms of the news profile. Tomorrow we've got FOMC minutes. So normally the rule for that is there's not a huge restriction, but you want to be avoiding the session before. That's typically the rule. So tomorrow will be kind of I may stream, I may not. It'll be based on the price action in the morning. So kind of the same exact thing today, where if it's blatantly obvious, I'll stream. It requires very little brain power for me to um, stream on the high probability days. So that's why I opt in on those. Otherwise, Thursday, Friday, for sure we'll have stream trades regardless of price action. So not stop stream trades, tape reads. So Thursday, Friday, you look for those streams there. Wednesday will be kind of iffy. We'll see. We'll still do a market review later today. And I had the Q&A posted from yesterday that's up right now into the YouTube vid section. That video specifically goes through how to mark up a chart kind of in back testing. So what I mark up, what I use in terms of like a higher time frame to lower time frame, what I'm marking up, what catches my eye, what's important to learn from. It's a full walkthrough from higher time frame to lower time frame. And if you want the screenshots that were shared from that live stream, you can go into the public stage and download those. You'll have to just kind of scroll up a little bit and you'll see all of them. All right, so I'm still expecting, based on the price action we're getting here, let me turn this off. We're still pretty bullish for the most part. I don't expect it to drop too far into this inefficiency here, just based on the fact we've got this right in here, right? So if it comes shallowly into that, that's fine, but I don't really want it to come back and touch this order block. I want really this to be left open as a breakaway gap if I'm being honest. Breakaway gap there fills some of it, but then we're looking for, I think, previous week high is a pretty good target, right? Just based on the price action, what we're seeing here, visually, as well as the 4-hour chart. Visually, what are we looking for? There's no real gap, although the 4-hour wick is an IRL. Like I said, we want to be watching how we are printing, going into this inversion gap, and on the 5-minute. If the 5-minute's still holding, very well could hold all the way up until the previous week high. All right. So, majority of my contracts are off on both this demo and on my other screen. So, I'm not looking for a huge runner today. I just want to get in, get out, get my wins, and be done. All right. Before I forget, if you want a good trading book, if you're struggling with psychology, if you want a good trading book, or if you just want something to read, it's a little bit pricey. But The Disciplined Trader by Mark Douglas is a fantastic book. It is arguably, I just finished it. I'm probably going to reread it again. It is arguably probably the best psychology book I think I've ever seen or read. It literally has changed my brain in a matter of 2 weeks that I read it through. I'm going to read it through again. I've highlighted a bunch of stuff, but it's about $60 in the US, which is definitely not cheap. I'm sure if you wanted to get a cheaper version, you could find something online if you wanted to, but I like hardcover books, but fantastic book. I'm not saying you got to pick it up. I'm just saying if you want something to read, great read. All right. So journal today. Do the things that are necessary to succeed. Continue to watch the price action if you want to, and we'll have a market review later today. This will be posted as well as that will be posted. All right. Yeah, that's also a good series too. I agree 100%. So take care today. Talk to you guys soon. And yeah, I'll see you later today. Peace.